Hey traders, and welcome to this week's Forex Focus, the weekly FX analysis show where we look at the markets to try and identify opportunities for the week ahead. Now, last week's trading, let's start off by talking about last week's trading because it was a little bit of a challenging one. You see, all of the major pairs, they pretty much moved sideways. So whilst there was some movement to the upside, some movement to the downside, if you take a look at the charts, and we will jump over to the charts in a moment, you'll see that it's literally just sort of like daily candle after daily candle moving sideways. Now, obviously, the positive part of that is that when you don't get breakouts in either direction, you don't lose money, okay? But the frustrating part is that you also don't have the opportunity to generate a profit. Now, the difference between professional traders and rookie traders is that during these periods of time, when there are no real opportunities out there, they're still trying to jump in there, trying to take trades just in a bid to make money because they sort of feel like if they're not in the markets, then they aren't real traders. And if they're not in the markets, then they can't make money. And they sort of ignore the fact that if you're not in the market, then you can't lose money either. And what we do as professional traders is that really we kind of just bide our time. This is where patience really comes into it. So you need to make sure that when the markets are right for your particular trading strategy, you're actually trading onto new equity highs as opposed to trying to dig yourself out of holes. Now, why is the market going sideways? That's sort of like the big question. And my theory is that the markets have pretty much priced in rate hikes for all of the central banks. So last year, a lot of what drove the markets, particularly in the dollar pairs. So if you look at the first, let's say, 3/4 of the year, we saw a lot of dollar strength as the Federal Reserve were ahead of the curve. They were really sort of hiking rates aggressively. And then the other central banks caught up towards the end of the year, which is when you started to see the dollar sell off. Then at the beginning of this year, we saw that the dollar started to appreciate again, and that was off the back of some stronger data out of the US in conjunction with the Federal Reserve coming out and saying that they're going to hike rates more than the markets were expecting. However, we've now come to a period of time where I believe the markets have all but sort of priced in the rate hikes from the majority of the central banks out there. And what they're waiting for is for a bit of an inkling, a bit of a clue as to which central bank is probably going to cut first, which I believe is going to be the Federal Reserve, but obviously that remains to be seen. The problem that we have, though, is when you look at the data, it's a little bit mixed. So if we look back at last month, you had the ISM, which was particularly in the services sector, which was particularly positive for the US dollar. You had the non-farm payrolls, which really came out and surprised to the upside, which showed that there was a strong labor market, which obviously gives the central bank, the Federal Reserve, confidence to be able to increase, to hike interest rates, knowing that the economy is okay at that particular moment in time. However, if you look now at the current month, if you look at some of the data that's come out over the last week, well, confidence is starting to decline a little bit. We're starting to see that the numbers aren't quite as rosy as they were. So that's obviously going to play on the central bank's minds, which hopefully, assuming that we can see inflation data start to come down, that should then move into or sort of like feed us into a period of time where the central banks will start to cut interest rates. You see, central banks, their primary mandate is price stability. So they're always going to have an eye on inflation. But their secondary mandate is obviously employment and the health of the economy. So they can't hike interest rates, or they don't want to hike interest rates to the point where they obviously strangle the economy. But whilst inflation is high, they've got no choice but to do that. Now, up until now, the markets have been fairly resilient. We have seen the stock markets sell off a lot, but in terms of the data that's coming out and things like that, it has been fairly resilient. So it's been okay. But I think that is going to start to take a bit of a turn. So in the coming months, we're going to see that the increase in interest rates is going to obviously make borrowing more expensive. So you're going to see businesses not as willing to expand, not as willing to invest in new areas and growing their business, which will obviously affect the consumer as well because they won't be employing as many people. So then we'll start to see the employment rates tick up a little bit as well. And then non-farm payrolls will not be nearly as positive as they were last month. So I think that's going to play out. You'll see the same thing across the board as well, across the globe. So if you look at Europe, if you look at the UK, Australia and places like that, you'll start to see that you'll start to get a similar sort of narrative, similar sort of data coming out there. In fact, if you take a look at the PMIs, so last week we had a bunch of the PMIs come out, PMI reports. Although they were ticking up, and some of them are in a little bit of an uptrend, they're still below the 50 level, which is contractionary territory. Okay, so when the markets and when the data is like that, you're thinking to yourself, well, it's in a bit of an uptrend, so you can be a little bit positive about where things are going, but then you have to remember that you're still in that territory where things are expected to contract. And the PMI reports and things like the ISM are very forward-looking, so they're indicators that you could almost say are leading in nature. They tell us what's going to play out in the markets in the next 3 months, the next 6 months, perhaps even the next 9 months. So whilst some of the hard data which the central banks look at is coming out and it's okay, so employment numbers are positive, they're okay, and you look at the retail sales, not the last week, but previously they were okay. Essentially the markets, the central banks will be sat there reacting to that sort of data, and that will be fine for the moment. But then if you look 3 to 6 months down the line, going off the back of the PMI reports, then we should start to see things decline. And then in terms of how that affects the currency markets, I think that whichever one starts to get weaker, the quickest, I think that's where you're going to start to see the central bank start to cut interest rates, which will then impact the longer term trends in the market. So how do we play the markets over the next, 1 month, 2 months, 3 months before we get those longer term trends established themselves? Well, I think essentially what we need to be doing is we need to play it tactically. So rather than, like last year, you would have been taking some strategic plays, longer term opportunities that you could have carried for a number of weeks, potentially even months. Now you want to be looking at some of the shorter term charts to look at some shorter term tactical plays, looking to take profits quite quickly, as opposed to hold them and run them for 2, 3, 4 to 1 reward to risk ratio. So really sort of go for those 1 to 1 reward to risk ratio trades, all in a bid to take tactical trades that you can use to increase your account sort of like slowly but surely, bit by bit, but being ultra consistent. I think that if you try to take some of the longer term trend trades right now, you might find that you're in a situation where you're holding the trades for longer than you want to, not because they're roaring off into profits. It's easy to hold your trades when they're doing that, but really just because they're going sideways, they might be pulling back against you a little bit, but essentially they're doing a whole lot of nothing. So with all of that being said, and sorry that was a little bit of a longer intro there, let's jump across to the charts and everything, and let's take a look at what's setting up for the week ahead. So if we start off by taking a look at the data. So at the moment, you can see here I've got the economic calendar. This is Daily FX's economic calendar, which I actually find to be one of the better ones. I know a bunch of you might use something like Forex Factory or something similar, but I find Daily FX to be really quite an effective one. It contains all of the data, it contains a lot of information, and it also allows you to filter. So for example, here I've got the last 7 days, but if I wanted to say, well, what were the PMI reports? I can just go in here, type that in up here, then I can see what they were. So just sort of filter by those and the types of reports over the last week or over the next week, as opposed to having to use the filter that just does it by importance, which is high, low, medium, because sometimes you might say medium, but you'll get hundreds of reports which you're just kind of not interested in. Now, this isn't a fundamentals lesson, all right? And I know that some of you will be sitting there thinking, well, I'm looking at this, I'm looking to find charting opportunities, but understanding a little bit about what the fundamentals are doing will help you be a better trader. And also looking forward to the week ahead, you have to take into account what economic indicators are being released, because it's going to affect the markets and the trades that you'll potentially be taking. Now, next week, there's a few sort of big bits of data out there. So if I just quickly filter here based on just the high importance for a moment, you'll see that what we have out next week, we've got out of Australia, we've got the interest rate decision. We've got Fed Chair Powell's testimony as well coming out this week. So that's something to keep an eye on. So if you're looking to take Aussie dollar trades, for example, this is something that you would need to pay attention to, okay? So we've got that coming out. Then in the euro area, we've got GDP coming out there. Canada, we've got an interest rate decision coming out. So we've got interest rates out of Japan as well. And then finally on Friday, we've got the employment out of Canada and also the non-farm payrolls and unemployment rate out of the US. So there's quite a lot there potentially could affect the markets next week. And it's not necessarily in a bad way. You know, you need this sort of data to actually move the markets because these provide the catalyst for the volatility in the market. So it's not something to be afraid of. I quite like it when you have data coming out in a week and important data because it sort of gives you a bit of a direction on the trades. And some of the best trades that I've taken have been off the back of big releases. And, you know, maybe I'll do a video on that at some point about how you sort of take big trades as opposed to just those small tactical ones and really go all in on some of those trades because you have the fundamentals with you. So there are things that we have to pay attention to next week. So really, if, you know, in actual fact, looking across the board, you've got the Australian dollar, the US dollar, euro, not so much. I don't think this is going to be a big market mover, to be honest with you. Japan, there's an interest rate decision out there, but I think that essentially that's not going to be a market mover. I don't think anything big is going to happen, you know, at the last policy meeting for the current central bank governor. So I don't think that's going to be a mover or shaker. And then on Friday, we've got the non-farm payrolls, which is something that we probably should pay attention to, okay? So with that being said, we've got the dollar, the Australian dollar really being the primary ones that potentially could move next week, which means that if we get moves in some of the other pairs, they'll probably be technically driven, which isn't a bad thing. It just means that, you know, there's nothing stepping in the way. So if you were to get a breakout in one of the pairs, then you could probably feel fairly confident that you will get some follow through there. Now, in terms of the major pairs, so if we go and take a look in here, let me enlarge one of these charts here. So we're on the daily chart, and we'll go through this in alphabetical order. You've got the Aussie dollar, as you can see here, and true to form, it was literally sideways all of last week, which is exactly what I said at the beginning of this. So the market moved sideways. However, if we look at the momentum, it is certainly to the downside, all right? So we have seen some dollar strength here. Obviously, we had that dollar weakness or Australian dollar strength from October of last year through to the beginning of this year. Then February last month, the markets, the US dollar really did get stronger, which is good. And I think looking at this over here, if we start to get a break below the 0.6690 area, then really you can say that the trapdoors have opened under the Australian dollar and you're going to get a bit of a sell-off. I don't necessarily think the same as the same can be said on the upside. So if we get a break above 0.6787 that you just want to become a buyer, sure, you potentially could look at the shorter term chart over here and see if you get any short-term opportunities. But even at looking at the 4-hour chart over here, I think that if we were to get a breakout, the breakout to the upside, there wouldn't be an opportunity to trade there. So really, I'm looking for breakouts to the downside in the Australian dollar. Then I'll look to take advantage of them. You guys and girls watching this, obviously trade your favorite strategy. What these videos are here to do is give you a bit of a view, and then you trade with your strategy according to that view. So looking at the Aussie dollar, I think that essentially we're looking for weakness in this particular pair. So as soon as the market closes below this low over here at the 0.6688, then we become a bear and we start looking for shorting opportunities. The next one to take a look at is the euro dollar. Euro dollar is a little bit more difficult because whilst we've had a sell-off here, if we look at this from the longer term perspective, it looks like this could just be a pullback in the upwards momentum. If you compare that or you contrast that with the Aussie dollar, you see the Aussie dollar is actually broken below. So really, I mean, you guys will use, as I said, your strategy to determine direction and things like that. But according to my strategy and the indicators I have here, it's telling me that everything is bearish. Whereas looking at the euro dollar, you can see that, yes, the market has broken down, but it's not quite as bearish. So the market is still holding at a support level. I think, so with this one here, I think that if you were to get a break above 1 spot 0696, or let's call it 1 spot 0700, you could become a bull. So you could look for buying opportunities. And then by the same token, if you get a break below 1 spot 0535, then you could look for shorting opportunities. So you can actually play this one in both directions once we get a breakout of this particular range. Jumping across to the pound dollar. So pound dollar is looking terrible from a charting perspective. So really you see that once the market came up to this high over here, it attacked it again, it then sold off, it then came back to this low. I wouldn't be as confident about taking a break to the upside in the pound dollar. I just don't think that it's going to yield a good opportunity. A break on the downside, I think we probably want to wait until the low of this previous candle over here. So back on the 6th of January. So wait for a low bit below 1 spot 1845, a break below there. Then we can start looking for some shorting opportunities. I said for a little while now that I think that the pound over the course of this year will probably be one of the more negatively performing currencies. Let's say I won't say it's going to be the worst performing currency, but it's certainly, I don't think it will necessarily perform very well if we look at the UK and data out of the UK. So if there is going to be some dollar strength, then potentially we'll be able to see it in this pair over here. So look for the pound dollar cable once it gets below 1 spot 1842 to obviously take us lower. So it could be some good opportunities there. The New Zealand dollar is similar to the Aussie dollar, so it has started to break down. The indicators haven't turned bearish or completely bearish yet. However, looking at this momentum here, I don't necessarily see an opportunity to start buying on the upside. I'd want more confirmation. But if we do get a break below 0 spot 6132, then I think that we could get a nice move down towards the lows here. Of course, keep an eye on the previous low on the 14th of July at 0 spot 6053, but the market is already reacting in and around that level there. So we can see that we've got this price zone that the market's reacting to. So I think if we get below here, the market will more than likely break below 0 spot 6058 as well. So another opportunity there, looking to short that particular pair. Now, if we get to the pairs where the dollar is the base currency, we've got the dollar CAD. Direction of this one here is really hard. I think that it probably will move up, but I think that we're going to have some problems. We're going to have a challenge here at 1 spot 3704. So wait to see how the market reacts at that particular level. If it breaks and holds above there, then start looking for long opportunities in your favored strategy. If it doesn't, if the market gets up here, then we get a big bearish momentum candle, then you could potentially look for some tactical short opportunities on a shorter term chart, okay? Looking at the dollar franc, so this one is bearish if we get the breakdown. We've had this sell-off over here. The market has then looked very labored. So since November, even though we've got a sell-off, look at how difficult this one is over here. So I think, if we get the breakdown, you can consider opportunities in the dollar franc. I would probably say look at some of the other pairs though, because the price action is cleaner in the other pairs. So this one here, you could wait for a breakdown and then jump down to a shorter term time frame to look for some clear price action. But just going on recent history over here, we can see that even if the market does move, it's going to be slow moving. So there might be some opportunities in other pairs to express the same kind of view. Maybe you go to some of the crosses, but essentially, I'm not sure that you would look to something like the dollar franc is a place to express either, your dollar view or your franc view. I think it would be better served in other pairs okay? Then we've got the dollar yen. So the dollar yen here is a bit of a difficult one. The dollar yen, we had this big sell-off and then we had the rally. So I've been buying into this rally pretty much over the whole of the past month. So I've got some nice profits in this particular pair over here. However, the market has struggled with these highs. Now, where does this go? At the moment, or what was causing some of the volatility last month was a lot of the speculation to do was who was going to be the new governor of the Bank of Japan. That is now sort of been put to bed. So now what the markets are looking at, as well as obviously what's going on with the Federal Reserve, with this particular pair, what could drive some of the markets is what's the new governor going to do with their policies? Is he going to move to more sort of like normalization of those policies? So the yield curve control policy, interest rates and things like that. Or is he going to remain the same and do what they've been doing up until now? So we need to see what's going to play out. I don't think that will play out either at this week coming up, this policy meeting, or even the one in April. I think that if there's going to be a shift in the policies in the Bank of Japan, we'll probably see it a little bit later, so May, June type time, and obviously they'll be paying attention to the data as well. So in terms of the way that you play this, there isn't really a great technical setup here. So what I would probably say is that you leave this one on the side for the moment. We wait to see how some of the other pairs play out. If you're desperate to get involved in this particular pair here, probably jump down to a shorter term time frame. So something like the 4-hour chart here, and look to buy strength here. So I wouldn't necessarily be selling just yet, because if we look at it on the shorter term time frame, it's certainly showing us that it is a bit of a bullish chart. And obviously with a bullish chart, bullish markets, we want to be buyers. Okay, so that wraps it up for this week's Forex Focus. Sorry if there was too much in terms of some of the fundamentals and economic indicators. It's just, it's the beginning of the month. There is a lot to talk about in that respect, because there are no clear trends at the moment. There's nowhere where we can say, okay, well, this is what's going to happen in the next 3 to 6 months, which makes it more difficult. Because if you have a view with a particular currency or currency pair, it makes it significantly easier to trade, because you can take that view and you can trade according to that view. It gives you that little bit of extra confidence to be able to really build into your positions. Where we are right now, we have to be very tactical with our positions, which means that our entries suddenly become more important than they would be if we had a view. You see what I mean? So if you have a view on the way the markets are going, then your entries don't have to be perfect. You can still make money. Whereas the conditions that we find ourselves in right now, we need to be a little bit sort of more surgical with our entries, with the things that we're taking, because we don't have the longer term view there to be able to drive us in the direction that we want to trade. Okay? So thank you for watching. If you liked what you saw here, obviously please make sure you like the video, you subscribe to the channel, but more importantly, if you want to learn the strategies that I use to trade what I'm showing you here, so I've given you a view. If you want the strategy behind that view and how you execute those trades, then pop along to my website. I'll post a link beneath the video here in the description and also in the comments. And what you can do is you can sign up to a masterclass that I've put together where I walk you through my entire trading and investment framework and show you how it is that I arrive at my trading decisions once I've got my view, which I think you'll find really, really useful if you're somebody that's trading the market, but you haven't really found that consistency yet. You haven't found that strategy that you can really identify with. My strategy is all built around being efficient with time. So anybody, if you have 30 minutes a day, you'd be able to utilize my strategy and you'd be able to make money from it. And what you'll find is that in the beginning, the way that I teach people to trade is really sort of to help them get profitable. Okay, it's not necessarily going to be, I'm not going to start off by showing you the most profitable way to trade. I'm going to show you the easiest way to trade. So the way that you can start to really sort of get money into your trading account, as opposed to you putting money into your trading account. You let the markets pay you. Then once you're consistent with that and once you've seen success, then we will start building on that and showing you how to get a little bit more sophisticated with your position so that you can make larger profits and grow your account more quickly over time. Okay, but that's obviously, you'll learn all of that in the masterclass. So if you are interested in it, jump across to the website. As I said, I'll post a link in the description. Sign up for that masterclass. If you have any questions, let me know. Otherwise, have a fantastic week trading, and I'll speak to you all in the next video. Take care now.